What's up, gang? We need to talk about something that happened in the market just yesterday, which is crucial in my personal opinion. And that is the fact that oil prices, if you look at the charts for whether it's WTI or Brent crude, the prices of oil are at 52-week highs. Well, what does that mean? Well, it means two potential things. And one of these things is very catastrophic for the overall markets because of the reaction that can have on inflation and how it could drive inflation higher. When a stock or an commodity, in this case oil, hits a 52-week high, it's either going to act as resistance. That 52-week high is going to act as resistance, or you are going to see a technical breakout and prices are going to go much higher than you could possibly expect, because now you introduce speculation into the markets, which drives prices higher. The higher the price of oil goes, the harder it is for inflation to come down, the tougher the Fed has to be. Whether they continue to increase rates, which is not expected, there's actually a rate cut expected next year. But if inflation is very persistent and we cannot bring it down because of higher energy prices and how that trickles into everything else in the economy, well, that's a problem, because that means a more hawkish, a more aggressive Federal Reserve, which means equities are going to sell off and bonds are going to move higher in yields. So we need to be watching this, because this right now is a breaking point for crude oil and, in my personal opinion, for the rest of the market. So if we see crude oil continue to break out and this 52-week high does not act as resistance, that's not good. But that is an opportunity to make money if you play the downside in equities, or if you put money into treasuries or anything else where you can get a nice yield at very, I want to say no risk. So just keep an eye on all that. I'm out. See ya.